I appreciate everybody joining us today. We're going to talk about trading automatic futures systems with the click of a mouse. I know many of you have probably been interested in futures trading systems and discovered that it takes quite a bit of programming knowledge to develop and then implement a trading system. But we now have access to products that will allow you to shop a database of already created systems and find something that may or may not fit your needs. If you're unfamiliar with who we are DeCarley Trading. We're located in Las Vegas, Nevada. We are a futures and options brokerage service. We don't offer stocks or stock options. We offer commodities, and that includes everything from stock indices, treasuries, currencies, energies, metals, grains, and even the meats. My name is Carly Garner. I am a broker at DeCarley Trading. I'm also a co-owner. If you have any questions about anything we talk about today, you can reach me at 1-866-790-TRADE, or you can send me an email at cgarner@decarleytrading.com. I'd love to hear from you. If you're interested in learning more about trading, we have several educational videos and articles posted on our website, decarleytrading.com. And if you're on social media, you'll find me on Twitter, Facebook, and Instagram. Twitter, my handle is Carly Garner, and on Facebook and Instagram, if you just search for DeCarley Trading, we will come right up. I mentioned I am a commodity broker. I started in 2004, so I've been doing this for quite a while. Believe it or not, it's a transient business. Brokers come and go. Very few stick around as long as I have, but I love what we do. It's a lot of fun. It's also a lot of heartache at times, but it is what it is. I also write a couple of newsletters for our brokerage clients, the Financial Futures Report and the DeCarley Perspective. If you'd like to sign up for a free trial, you can do that at decarleytrading.com. You might have seen me in Stocks and Commodities magazine. I write a monthly column, and I also contribute content regularly to the Mad Money Show with Jim Cramer. He likes to talk about some of our commodity analysis, mostly technical analysis, but we also talk about the commitment of traders, seasonals, and that sort of thing. We do talk about system trading and many other things in my latest book, Higher Probability Commodity Trading. You can purchase it at any major outlet. However, it's cheapest on Amazon. You know how that goes. Amazon, let's face it, they're good at what they do. If you'd like more information on the book or to read a couple chapters, sample chapters, higherprobabilitycommoditytradingbook.com will allow you to do that. So let's get started, but before we do, I just want to make sure everyone understands that there is a substantial risk of loss in trading futures and options. It's not for everybody. This is not investing. There's no dividends. There's no interest payments. All we are doing is speculating and attempting to beat the markets, and it's not easy to do. So let's talk about what are futures trading systems. An automated futures trading system is defined as a set of technical rules and parameters that ultimately determine entry and exit points for a particular futures contract. If all stipulated technical events occur, a buy or sell signal is created and executed without human intervention. So if you've been following our newsletters for any period of time, or our videos or our webinars, you've probably seen that we generally advocate what is known as a discretionary trading approach, meaning it's not automatic. Instead, we're looking at charts and data and determining whether we're bullish and bearish, and then putting a strategy together accordingly. Obviously, there's really nothing automated about it, and it's a little more prone to emotion because as humans, we're emotional and we're trying to make decisions based on what we see, but sometimes, unfortunately, we make it based on what we feel, and that's not the right thing to do. So emotional traders sometimes turn to futures trading systems to eliminate some of the emotions. Trading systems are basically putting your account on autopilot. You might also hear it referred to as algorithmic trading. And a quote that I think applies to our industry very well by James A. Baker of GE is, "You must automate, immigrate, or evaporate," and that is very true in the commodity markets. Things have changed dramatically since I got started in 2004. It used to be I spent my day on the telephone, squeezing the phone between my ear and my shoulder. I had neck issues. Now everything's electronic. Most of my clients communicate with me through email and text message, and I might get a couple phone calls a day, but it's mostly electronic communication. So things are changing and we need to change with it. Part of that might be at least considering automated trading. And again, it's not for everybody, but we want to make sure we give you the information and you can decide for yourself whether it fits your personality and your needs. I just want to make extremely clear, and I'll probably say this about 20 times throughout the presentation, so don't hold me accountable for that, but I want to make sure everyone understands automated trading does not mean automatic profits. I know that this is not what you hear on TV. The media and politicians often portray algorithmic trading or system trading as being basically anyone involved in it as being flush with profits, at the expense of the retail trader, of course. But I am not convinced that this is the case. Trust me when I say this, for every good trading system, there are multiple poor systems. That said, there is definitely an advantage of having automated systems in that they're quick to react. So somebody that's trading a discretionary system, staring at their screen, waiting for a certain moving average crossover to occur or whatever the signal is, and then hitting the button, they're definitely reacting a little slower than what a computer would if the computer was automatically generating the system and executing it. So there is a little bit of an advantage there for computer traders, but we view this advantage as basically akin to the edge that those trading in the open outcry pits used to have prior to the pits being closed. If you remember back in the day, yeah, I'm that old, people used to trade commodities on paper. So if you wanted to buy or sell corn, you would call your broker, and then your broker would call into the trading pit on the CBOT, and then the guy on the other end of the phone in the trading pit would make some sort of hand gesture to another guy that's standing in the pit. So as a retail trader, the delay between your order and actually having an opportunity to get filled is pretty substantial. The guys standing in the pit, they see orders coming in, they see stop orders, limit orders, they see what's going on, and so they can react a lot faster to somebody on the phone in California trying to place a grain trade. So obviously pit traders had an advantage, and obviously in this case electronic system traders might have a little bit of an advantage. However, just because there's a little bit of an edge doesn't mean that there's guaranteed profits. Trust me, I have heard horror stories of pit traders and system traders losing a lot of money, losing it all, and in some cases even losing more than they had. So don't underestimate the risks of system trading. Don't complacently enable a system and just forget about it. That's the worst thing you could do. Systems must be actively monitored, and I'm talking about daily. If you participate in any of the systems that we are going to offer access to in this database, be sure that you're following what's going on each and every day. You don't want any surprises. And if things are going in a way that's making you uncomfortable, you want to be able to pull the plug immediately rather than a couple of weeks down the road you realize, hey, that's a little more risk than I was interested in taking. So let's talk about the advantages and disadvantages of system trading. Why use an automated trading system? Well, as we've already mentioned, automated trading systems are not perfect, but nothing in trading is. Whether you're automated trading or you're discretionary trading, your strategy is never going to work all of the time. But the purpose of automated trading is to reduce some of the emotions involved. So those with emotional personalities or those that are short on time might find a hands-off approach is ideal. The primary benefit of trading automated trading systems is the elimination of emotions, and I shouldn't use eliminate. The better word is mitigate. But that said, most trading losses, and when I'm talking about trading losses, I'm talking about not necessarily system trading losses, but losses in general of all trading strategies, discretionary systems, whatever the case is. Most trading losses are the result of mismanagement of fear and greed, not the trading strategy itself. Obviously, somebody that's putting a strategy to work in the markets has already done their homework. They've backtested, they've studied charts and data and all those types of things, and they think that they have an edge. Otherwise, they wouldn't put the trade on. And generally, they probably do. The problem is emotions take over, and it either causes us to get into the market prematurely, maybe we jump the gun, or we get out prematurely if something doesn't go perfectly, we have our stop too close, or whatever the case is. Emotions make things difficult. even if I gave you the absolute perfect trading signal to buy the S&P on the low and sell it on the high, that doesn't mean that you would actually be able to make money on that trade, because you might have made a poor decision somewhere along the way. So it's not always the strategy that goes wrong, it's us as people. We're humans, we make mistakes. Trading systems is a time saver. It's a great way to get away from the screen and resume your day job in peace. I know a lot of traders are staring at their cell phone all day, looking at market quotes, checking their positions, and that's okay. I mean, obviously you want to be following along. However, an automated trading system would mean you probably only need to check it a couple times a day, maybe at the end of the day. You do need to monitor a trading system, but you don't necessarily need to be staring at the S&P tick for tick. Trading systems are convenient. It's basically letting the computer do most of the work. The account is on autopilot. All you need to do is monitor it. Again, maybe once or twice a day is sufficient, but don't make the mistake of not looking at all. If you go a week or two without looking at your trading system results, you might be surprised to see what you find. And I don't mean that in a good way. And last but not least, like market systems can be traded, speculators can actively trade a future system performance based on implementing the system on a drawdown and stopping it after a good run. This is contrary to what most people by nature want to do. Most people want to chase performance. If a system's doing fabulous, that's the one they want to put on. But generally, the system that does well this year probably isn't going to do well next year, and vice versa. That's just how systems work. Just like markets have cycles, so do systems. So the drawbacks of an automated trading strategy is basically they lack common sense. They are driven by technical analysis rather than human discretion, which in some ways is good, but they will habitually generate signals that might be considered low probability trades. For example, they might sell the all-time low or buy the all-time high. It might enter a position prior to an economic announcement or following some sort of surprise weather event. Systems don't know. Systems only know the charts, the indicators, and the technicals. So I also want to point out that just because your account is on autopilot doesn't mean it's guaranteed profits. Obviously, you're going to hear me say this over and over again. Just want to make sure that people understand that. And the goal of a system trade is to reduce stress, but that's not the case for everybody. System trading is not stress-free because obviously the system's not always going to work the way you want it to. So there is definitely some stress, and in some cases, some personality types might discover that automated trading actually creates more anxiety than being in the driver's seat does. And part of that stems from the fact that backtesting is limited. The benefits of backtesting are limited. Systems are generally developed through backtesting, but this only tells us what the system did in the past and not necessarily what it will do in the future. And so you can imagine it's really frustrating to put on a system that has done fabulously in the past, and then all of a sudden when you implement the system, it starts to hit a rough patch. That's frustrating and can cause a lot more anxiety than maybe trading on your own could. So you have to determine whether your personality fits the style of trading. Markets are dynamic, they're not static. Similar to the flaws of backtesting, system performance at any given point may or may not reflect the ability of that system to operate profitably throughout time. Market conditions are fluid. They change. And this is what gets to me, is automated trading systems might be contrary to your opinion. If you are bearish the S&P and the trading system goes long, this might cause some sleepless nights. So system trading mitigates the emotion involved in entering and exiting a market because you're not making that decision, but it can be challenging to watch the system execute a position that you don't agree with. Do automated trading systems work? Well, like any other strategies, sometimes they do, sometimes they don't. Let's face it, if making money in the markets was as easy as quitting your day job and buying or leasing a trading system, then everyone would do it. But, you know, as we all know, we all work. It's far more complicated than that. There are, I mean, I know it doesn't always seem that way because if you're checking out trading forums and websites and Twitter, Facebook, there are a seemingly unlimited number of futures trading systems, software vendors, and other types that are trying to sell you something, and they will do anything to convince you that their product is capable of consistent returns in all market scenarios. However, I've yet to find such a holy grail in trading. Hopefully somebody proves me wrong, but I truly believe that that does not exist. There is not a system or a strategy that works in all market conditions, unfortunately. Any particular system will work well in certain market conditions and fails to work in others. That is the reality. There's nothing new here. Perhaps the answer to this, in regards to system trading, is trading multiple systems. Diversify. So, in other words, rather than just implementing one particular trading system, you might want to do two or three. I know some professional system traders that implement dozens at a time. Of course, that takes a lot of capital, and most of us here today are probably not dealing with that kind of an account. So 2 or 3 is probably a good starting point. Also, these are good ways to diversify away from your discretionary trading. So if you're trading a personal account, making your own decisions, maybe it's option selling or spread trading or whatever you're doing, and you want to just diversify away from what you're doing, system trading might be a good alternative for you. So let's talk about what we're here to discuss today, and that's employing an automated trading system with the click of a mouse. As I mentioned right off the bat, those with an interest in system trading often discover that it takes a substantial amount of computer coding to develop an automated trading system. I mean, I know myself, I consider myself relatively tech savvy, good with computers, but the thought of actually writing code to program something is a complete nightmare. I've sat down and tried to learn and tried to do it a couple times, and it's not an easy task. And it's time consuming, and it's definitely frustrating. So, you know, throughout our conversations with other industry professionals and through our contacts, we are now able to offer a fluid database of previously developed and tested futures trading systems that can be employed or stopped with a single click of a mouse. This is important. There is no lock-in period. There is no delay. If you want to start trading a system today, you click on a button and it begins trading. If you want to stop that system an hour later, you can do that too. I'm not saying you should, but you could. As you start and stop systems, you could do it an unlimited number of times throughout the month, and you are in 100% control. There's no programming knowledge required. The nice thing is, once a system is implemented, you will also be able to follow your profits and losses in real time. You can see the trades being executed, and you can see how they're doing. Every tick that the market moves, your account balance will go up or down, and you see that. This is in stark contrast to how it used to be. You know, back in the day when I first got into this business, system trading was a lot different. It wasn't mechanical, it wasn't automatic. There were actual humans involved. So if a signal was provided by a particular system, then a broker would go into the client's account and punch the trade in and execute it. So there was not only a delay, but if a client wanted to stop trading of that system, usually it would probably take a couple of days for the communication to filter through and to work the existing trades out and that sort of thing. But in today's electronic world, it's simple. If you want to go out, you just click a button, you're done, the system stops, and you'd have the option to liquidate existing trades or to let the existing trade play out and to simply just stop taking new trades. So let's talk about the database itself. Now, keep in mind, the first step to getting involved in this system trading with this database is to open a futures and options trading account, preferably with DeCarley Trading. We'd love to work with you on this. But there's a handful of brokers out there that will offer access to this exact same database. What we love about this database is it enables traders to sort and seek automated trading systems based on performance, drawdowns, required capital, and many other factors. In a few minutes, we'll show you how to customize this page to show only the information that you want to see, and you can also filter systems. You'll see that there's over 700 systems in the database, so filtering is nice to cut out any of the systems that you're not interested in right off the bat. One thing to keep in mind with this database is the systems generally focus on one market, and that's a little different than what you might find elsewhere. A lot of system trading programs will offer a particular technical analysis system that triggers signals in several markets, maybe 10 markets, maybe 15, maybe even more. These systems specialize in one particular market. You'll notice the first one is the ES, the E-mini S&P. It's blocked out, but you get the point. Second one is crude oil. And keep in mind, these are just systems that were randomly at the top of the database. We're not recommending them or advocating for them. We're just using them as examples. So the markets traded is going to tell you which market that system trades. Be wary of DAX systems. Not that there's anything wrong with the DAX, the market itself, or anything wrong with the system, but the DAX is a very large futures contract. The margin's high and the risk is high. So you're going to see a lot of account volatility with the DAX. I would recommend, especially if you're first starting out with this type of thing, avoid the DAX systems. And then as you get more comfortable with how things work and you want to take on some more risk, maybe you can consider the DAX. The rating system, this column here, all systems are rated 1 to 3 dots. 3 is the highest rank, and it's based on, and this is, by the way, this ranking system was created by the database creator himself, and it takes into account worst drawdown, return, length of track record. By all means, I wouldn't choose or unchoose the system based on this ranking system, but it's just another data point to keep in mind. The type of the system, you'll see either an I or an S. An I is for intraday. That means it's a day trading system. A swing trading system would have an S, and that means that it's going to hold positions overnight and maybe 2 or 3 days, maybe even longer than that. But it's not a day trading system. It's a position trading or swing trading system. The start date is going to tell you when data began being collected for these particular systems. So all of the stats you see here and all of the stats that you will see on the following page that I'm going to show you are based on that particular start date. A couple things to keep in mind. The start date does not mean that there was live trading going on from that start date to now. In fact, I'd venture to say probably in all of the systems in the database, the start date is going to start with where the back testing started. The live trading isn't going to start until just recently because this is a relatively new offering and product. So again, September 2007, that gives us lots of data and information to go off of. That doesn't mean it's live trading data. It's back testing data. It's hypothetical. And obviously, just because a system shows that over time, throughout history, it would have done very well, that doesn't mean that going forward, it's guaranteed to do just as well, or it's even guaranteed to do well at all. It might lose money. But these are just, this is all the information we have to go on, so that's what we do. The total P&L is the accumulated profit and loss since the start date. Obviously, these two systems have done very well, but of course, systems, again, past performance isn't indicative of future results, so we have to keep that in mind. And also, we have to keep in mind that drawdowns are going to happen, and they can be big. If you'll notice, these each have drawdowns close to $4,000. And that could be hard to stomach. Unfortunately, I would venture to say a lot of people running the system would be very tempted to stop trading the system, probably at the trough of the drawdown. So when you're looking at this database or any database in general, whether it's CTAs or hedge funds or trading systems, whatever it is, you always want to read between the lines in regard to what the information they're showing. Let's focus on a couple of these columns here. So winning sessions obviously is going to give you the percentage of trading sessions that system has made money in. Obviously, you ideally want it to be over 50%, but not necessarily. There are some trend trading methods that have performed well in the long run, but only make money on 25–30% of their trades. So just because the winning percentage is very low doesn't necessarily mean the system's not going to work. It just means that it's probably a trend trading system, and they're basically swinging for the fence. So when they do hit that home run, could be big profits, but in the meantime, you're going to get a lower winning percentage. And again, it comes down to personality, what you're most comfortable with, which strategy you prefer. Profit factor is essentially a ratio between the profits and losses. They take the sum of all the profits divided by the sum of all the losses, and it comes up with this number. Ideally, you want to see something above 2, but just because a system is below 2 doesn't mean you should completely throw it out. Remember, it's possible that a system that's performed well overall, but it's in a short-term drawdown, during that drawdown, the stats are obviously going to become less attractive, but maybe that's exactly when you want to get involved with that system. You don't necessarily have to be in the system that did really well last year because it might not do so well this year. The worst drawdown is the worst peak to valley loss of the system calculated on a closing basis. This is important because the market, just because it closes in a particular area, doesn't mean that it wasn't worse at some point intraday. So intraday drawdowns could have been even worse than what's being shown as the worst drawdown. Keep in mind, volatile markets rarely close on highs or lows. They usually make some sort of excessive spike in one direction and then revert back to more of a mean or an average price at some point before the close. This happens all the time. Think of something like the flash crash. I don't remember the exact figures, but I know the S&P was down 150, 180 points at some point during the day, but by the close, I think it was only down 70 or 80 or something similar, but you get the idea. The point is, at some point during the day, it was a heck of a lot worse than the close. And so those worst drawdown figures might be mitigated. Like they might actually show smaller drawdowns of what really occurred on an intraday basis. The required capital is the amount of money required in the account for the system to execute signals. If you have less than this amount in your account and you try to turn on a system, it won't trade for you. You have to have that in your account. And it's a bare minimum. You really want a lot more than that in your account to trade these systems. I would recommend probably about 10 times that amount. In fact, I'm going to show you in a few slides the suggested capital, which you'll find is going to be roughly 10 times that on most of the systems. So to give you an idea, if you wanted to customize the home page of this database, you could click on the Customize table, and you can choose which items are most interesting to you. And remember, anything that you have as a column on this home page, you can sort by that information. So if you want systems with the highest Sharpe ratio or systems with the cheapest or more expensive license cost, you can click these items and then sort by those columns. You can do the same thing by clicking on the Filter Systems tabs, and that will give you the opportunity to eliminate the systems that you just have absolutely no interest in based on the columns that you want to filter by, etc. So let's take a look at a stat sheet for an individual trading system and see if we can get an idea of what it is exactly that we're looking at and just be aware of a few things. So if you're on the home page, which is the database page that I was just showing you with the columns, if you click on the name of a particular system, it's going to pull up a stat page. And this stat page is going to show you the details of that particular system, access to trade logs, system subscription costs, that sort of thing. So we're going to break this down into 3 pieces. On the top of that stat page, you're going to see a net accumulated P&L graph, as well as some of the major funding information at the top. And you're also going to find the cost of this particular system. Now, these systems vary anywhere from $50 a month to about $300 a month. There may be even some on the outskirts of that, but I'd say most of them fall in that general area. Obviously, you don't want to only look for $50 systems, because if they're only charging $50, maybe that's all they're worth. You know, it's not that maybe you get what you pay for. But at the same time, you don't want to assume you're going to get what you pay for if you pay on the higher end, because just because you buy a system for $300 a month doesn't guarantee you profits either. So again, you want to look at the stats, do your homework, and then you can use the cost as kind of a secondary decision maker. Also, keep in mind that all of the figures that you're going to see in this database, profits and losses, drawdowns, all of those sorts of things, they already include the commissions, the slippage, and the subscription cost. So that subscription cost is already deducted from the total P&L numbers that you're looking at. The suggested capital is the ideal funding based on the system's worst historical drawdown. And basically they target roughly a 33% drawdown for your suggested capital. So obviously it is possible for the system to lose more than 33%, but this is what they're saying is you should be prepared for. Maybe the next drawdown will be smaller, maybe it'll be bigger, but that's what you should just in your mind be willing to accept if you're going to get involved in that system. And all of the numbers that you see here in regards to this graph are based on one of three categories. It's either live results, tracked results, or back-tested results. Most of the systems in this database, if you go all the way back, if they have several years of data, it's probably almost all back-tested. The live results would just be in the last year or two because, again, this is a newer product and a new database. They may have had this system trading somewhere else on in a different format or a different environment, but for the purposes of this database and system, these systems started trading maybe a year and a half or so ago, most of them. So and I'm going to show you how to decipher what is real data in regards to live trading and what's hypothetical and that sort of thing. And by the way, tracked results is what they use if there was an account that traded the signals for part of the month. They may have only taken one signal, or maybe they took almost all the signals, but they started the system a day or two into the month and they missed one. Another thing to keep in mind is all of the stats, particularly the percentage stats, are a little bit tricky because they're not necessarily, it's not what you see is what you get. In these stats, the model account rises or falls by a single contract profit or loss achieved by the system, so that makes sense, with the starting suggested capital each month. So every month the starting capital resets to $15,000. So if on month one the system made $1,000, your account balance is now $16,000. So any profits or losses going forward are going to be calculated based on, and I should say return on investment would be based on the $16,000, but the system and the database is only calculating it on a $15,000 balance because they reverted back. So it's almost like in your live account, if you took money out every month, if you took all the profits out every month, and then on months that you lost money, you actually added money back to the account to bring it to $15,000, it would be the equivalent. But you'll notice that the return on investment is going to be different in your account than the system account, not because your profits and losses in dollars are that much different, but just because the hypothetical results that you're looking at in the database are reverting back to the $15,000 starting capital. So in other words, just in short, the percentage profits in the database are going to be enhanced when the system is doing well, and actually losses will be mitigated when the system is doing poor on a percentage basis. Again, the dollar value isn't going to change. So the middle section of the stat page is going to display things like this. The analyzed sessions, 2,426. That's the number of trading sessions in the period. Could be hypothetical, could be live, or it could be both. The profit factor. The profit factor is the ratio between profits and losses. They take the sum of the profits divided by the sum of the losses. And again, I mentioned before, you want to see a profit factor of 2 or above, but it's not the end-all be-all. One thing to note in this database is if you see a plus sign next to any of the information, if you click on it, it will give you a pop-up description. So if you want more information, just click on this little plus sign. In the middle of the stat page, you're also going to find the commission per side. Now, obviously, per side means getting in, and then you're going to pay another one to get out. So the round turn commission would be $15 in this example. Keep in mind that commissions in this database on all these systems are going to be the same regardless of which brokerage you choose. So like I mentioned before, there's going to be a handful of brokers that are going to offer this database. We hope that you choose DeCarley Trading because, for one, we'd like to believe that we can give you superior service. But number two, you're not going to find it any cheaper elsewhere anyways. The rates are going to be the same regardless of who you're trading with. So to give you an idea of how it works, if you're trading the stock indices, the round turn commission is $15, and that includes all exchange fees and every clearing cost, everything. That's an all-in rate. That's equivalent to $7.50 per side. So you're getting in with $7.50 and getting out with $7.50. The systems in this database, I mean, they all vary, but they're not extremely active. This particular system that we're looking at here, it might only trade a couple times a week. So just keep that in mind. I mean, each system is going to be a little different, so pay attention, look at the trade log, get an idea for what the volume's like. But you're probably not going to rack up a ton of commission in most of these systems just because they're not super active, but they're all different. So again, go to the trade log and just take a look at that and see how often it's trading. I'll show you how to do that in a few slides. In the meantime, another thing to look at is percent of time with open positions. This system is only has an open position roughly 30% of the time. Well, that's probably a pretty good figure. You don't want to, well, my opinion is you probably don't want to trade a system that always has a trade on, because that gives you more risk of being in the wrong place at the wrong time. And also, you're probably going to find a hyperactive system. If it almost always has a position on, it's probably over trading. And I've found regardless, my experience has been regardless of what you're trading, what the strategy is, usually less is more. The more you trade, it's generally riskier and generally counterproductive. So you'll also find the current run-up since the drawdown low. So this gives you an idea of how the system is doing relative to the most recent drawdown. And you can see the current drawdown is roughly 2,500, and that's after making back the 1140. It just so happens that the worst drawdown was just recently, and so that's what we're kind of trying to recoup here with the system. So the winning session average is a little higher than the losing session average. That's a good sign, as long as the winning percentage is appropriate. So this might be a little troubling if the system was only winning 30% of the trades. That's not a big enough differential to work. But this particular system, if I recall, it's winning roughly 60% of the trades. So those are actually pretty good stats. So you also can get an idea of what to expect with the system. Now again, this in no way, shape, or form draws any type of limit on how good or bad a day can be, but it will give you an idea, on average, what you might expect. So you're going to see some definite swings in your account. The average losing swing will put you down a couple $100, and the average winning will increase your account by roughly $380. Now, above that, you'll see the best session and the worst session. Both of those occurred in 2008, so that does tell you something. Obviously, 2008 was kind of an anomaly. The markets were a lot more volatile back then. We may or may not see that again, but you should, if you're going to participate in these kinds of systems, you just have to understand that those are possible. That has happened in the past, and there's nothing that guarantees it can't happen in the future. So for all of you math geeks out there, you may enjoy taking a look at the Sharpe ratio or the Sterling ratio. The Sharpe ratio measures the excess return per unit of risk. It's basically saying how well the program is compensating the trader for the risk taken. A higher Sharpe ratio suggests a better return for an equivalent risk. Obviously, the Sharpe ratio and the Sortino ratio really don't mean anything unless you compare them to the other systems. So the only way to get an idea of how good 2.9 is to go look at the Sharpe ratio for this system versus the others in the database. And then you can see whether or not it's meaningful or helpful. The Sterling ratio is similar. It's a risk-adjusted return metric measuring return over drawdown. So that's telling you what the return of the system is versus the drawdown. So how many, like, are you being compensated for writing out that wave of losses? Obviously, it's the same situation. You want a higher number in the Sterling ratio. The higher, the better. But again, it's only important to you if you can compare it to other systems. So on a relative basis, that information might be helpful, which is why the home page, you may want to plug the Sharpe and the Sterling ratios into your columns so you can sort by those and just kind of get an idea of which systems have returned better per risk. So again, I just want to point out all of the depressing numbers are on the right-hand side here of this section. If you're going to participate in a system, you'd better make sure that you're comfortable with these types of losses, whether it's the worst drawdown or the current drawdown or the worst session. If you want to participate in the system, you have to understand those are the risks. At the bottom part of the stats page, you're going to find three tabs: monthly P&L, trade log, and session log. You're also going to see a little key here. Each of these three tabs are color-coded. White is back-tested, tan is tracked, and green is live trading. Like I mentioned before, a lot of these systems go back. They have start dates in several years ago, but just because that's when the start date doesn't mean that there's been live trading during that time. In fact, most of these systems have been back-tested for several years and have just gone live in the last year or two. And this one is no exception. So all of this white is back-tested data. In other words, it's hypothetical data. It's not necessarily real. There wasn't a trading account trading all of the signals in those trading months. These green data points signify that there was live trading, and there are real accounts trading, and there were accounts trading from day one through the last day of the month. If those boxes were tan instead of green, that would mean that while there was some live trading, there wasn't a live account that took every single trade. If you click on the trade log tab at the top, it's going to give you a list of all of the trades that system has done. Obviously, I can only fit a couple here on this slide, but if you, in the real database, if you clicked on trade log, you would be able to see all of the historical trades if you really wanted to. You could sort through them. Keep in mind, a negative means short, so this would be selling one, this is buying one, selling one, and then you can follow the open position: flat, long one, flat, short one. You'll also see the hypothetical fill price versus the average live account fill price, the best and worst live account fill price. You might be surprised to see how big of a difference there is between the hypothetical fill price and the actual live result, and that's because there's going to be slippage. For example, in a hypothetical system, if the stop order is placed at 23, 26, 25, it will get filled exactly there every time. But in a live account, it's possible you get slippage, especially on stop orders. Might be a little above, might be a little below, but there's going to be slippage. These systems all account for slippage in the data. Let me go back to the previous slide. I forgot to mention, it does point out slippage per side. So this particular system is accounting for almost $14 worth of slippage on a round turn. So that's built into all of the numbers. And I think that's pretty fair. In most cases, the slippage probably could be a little less than that, but it's always better to overestimate than to underestimate. So let's go back to the third tab, which is session log. Session log is similar to trade log, but it's going to give you all the data per day as opposed to per trade. So you'll notice this particular system, it's not crazy active. Like a lot of people think of automatic trading systems and they think it's constant in and out, and that's not necessarily the case, although it might be with some of the systems in this database. But you can easily go to the session log or the trade log and get an idea of how many trades this system is doing. I mean, you can see, by the way, if it says traded volume, and it has a 2, that's getting in and getting out. So that's really only one round turn. So it's basically doing one trade every other day or so. So it's not excessively active by any means. And again, you'll see the price the position was closed, the hypothetical profit and loss versus the live trading account profit and loss in both points and dollars. You'll notice these are green. All of these rows are green, and that's because these were done in live trading. If this was simply a system that nobody else was trading, maybe it's new or nobody had any interest in it, these would all be white, and it would be white for backtested, and you wouldn't see any of the information in this column for slippage because obviously there's nothing to compare it to. So let's talk about one-click initiation of a system. Now, once you have your futures and options trading account open with a broker that does provide access to this trading system database, again, preferably you choose DeCarley Trading. But in any case, once your account is open and funded and you have access to the database, now your broker will give you a username and password. You can log in, and this is what you're going to see. If you find a system that you like and you want to begin trading it, you're simply going to click on the lock icon, which will look like this. And when you click on that, it'll give you the option to buy the license. Once you have bought the license, you no longer will see the lock icon next to that trading strategy. You're going to see this plus sign. And with the plus sign, if you click on it, it'll bring up a little menu that will allow you to either start or stop your strategy. In this case, it says stop strategy because this was running on an account that already had that strategy running. So if the strategy wasn't running, this would say start instead of stop. But you get the idea. Click. So I probably lied. It's not one-click system trading. It's more like 2 clicks. And again, I want to point out that with this type of system trading, you are in full control. You could start and stop a system within a minute or 2 if you really wanted to. I'm not saying you should, but you could. You could start and stop multiple times a day. You could start the system and let it run for several months. It's up to you. There's no lock-in period. There's no limits. You're in control. Let's talk about trading a trading system. So like markets, systems can be traded because markets and systems both go through peaks and valleys. Some trading systems are going to perform well in trending markets, while others perform well in choppy markets. A system that performs well in all market conditions doesn't exist. We've already discussed that. The market doesn't send us a memo letting us know in advance what conditions will be like in the future, and that's unfortunate. It would be nice information to know. And also, what worked last year might not work this year. In fact, it rarely does. So instead of chasing performance, consider employing a system that has suffered a large drawdown, but has promising long-term stats. And you can do this from the home page of the database by going to Customize Table, choosing Worst Drawdown and Current Drawdown, and then sorting the systems by those columns. And that'll give you an idea of what systems are in drawdowns. I'm not saying you pick the system that's doing the worst. In fact, that's absolutely not what you should do. But this will give you an idea to find a system that's in a drawdown and look at the other stats and see, is this overall, has this been a profitable system? And if so, it might be something to consider. So for instance, you may want to stay away from this particular system because the current drawdown is only $800, which honestly, that's not much of a drawdown at all. So I'd probably not consider that for this particular analysis because you can see the worst drawdown was $6,000. And this one must be on some sort of a recovery, although it's done pretty well overall. So if you go to the next one, the worst drawdown was $6,000. The current drawdown is $3,000. but the system has pretty good stats. I mean, you'd want to go much deeper than this, but maybe this is one to put on your radar. Profit factor of 2.25. Winning sessions is over 50%. Positive ROI. Total P&L is positive, so that might be one to put on your radar. So is system trading for you? Obviously, it's not for everybody. First thing to keep in mind is if the advertised profits of an automated trading system are too good to be true, they are. Don't waste your money and heartache chasing a pipe dream. And when I say this, I'm not necessarily referring to the systems in the database that we've been talking about today, but just in general, there's plenty of system vendors and software salesmen out there trying to tell you they can double your money in a month or two. Trust me, it can't be done. I mean, it can. I've seen things like that happen, but in the long run, it's not realistic either. And if they did double somebody's account in a couple months, they probably just got lucky, and it'll come back to bite them down the road. So, if you fully understand and accept the risk of drawdowns in exchange for potential of hands-off trading, and if you are capable of allowing the system to work without interference, and if you understand that chasing performance might not be the best approach, and if you are open to diversifying your system trades to multiple automated trading systems and or would like to diversify your current strategies, then system trading might be for you. So you may or may not be asking yourself, how do I get started? Well, it's simple. The first step to getting started is to open a futures and options trading account, preferably with DeCarley Trading. But as I mentioned, there's probably a few other brokers out there that'll be offering the exact same product. Again, regardless of which broker you use to trade systems in the database, the commissions are going to be exactly the same, but I would like to believe that you're going to get a lot more for your money here in return. For example, better service. We actually answer the phone. We work long and hard hours to make sure everything is going smoothly for our clients. So if you want to learn more about us and what we do, you can visit DeCarleyTrading.com. If you're interested in opening an account or gaining access to this database, I can let you see it and look around and do your research before you commit to opening an account. Just email us at info@DeCarleyTrading.com and we'll get you all the information. If you have any questions and you prefer to call, you can give us a call, 1-866-790-8723, or you can dial locally 702-947-0701. So again, we'd love to have you on board, and we'd love to help you get your account up and running. We can do it generally within a couple of days. It's pretty painless. That said, I just want to make sure everyone understands that we, DeCarley Trading, nor myself, Carly Garner, we did not create, nor do we necessarily endorse any of the systems in the database. We simply are providing access to our clients, and we hope that we can give you the information that you need to make educated decisions on which one may or may not work for you. So I appreciate everybody coming out. Again, if you want more educational material, videos, articles, or just information about us, you can visit our website. And if you're interested in learning more about discretionary trading or even system trading, we offer a lot of information in my newest book, Higher Probability Commodity Trading. We talk about trading options against futures, covered calls, option spreads, short options, analyzing the commodity markets. A lot of the analyzing that we talk about in the book is seen on Jim Cramer's Mad Money. We provide content to the show. So if there's anything that you're interested in, I think you might find it in this book. It's available at all outlets, but it's cheapest at Amazon, and they offer free shipping. This book is a monster, so the shipping is a good it's a good perk. If you have any questions for me or about anything we talked about today or trading with us in general, please give me a call or send me an email. Here's all of my contact information, and I would love to hear from you.